It's August 25th. Let's go ahead and get started. We know there's risk in trading. Please don't always use trade capital only. Do not trade with money you cannot afford to lose, whether you're trading stocks, options, futures, forex, cryptos. You know the deal. Social media, best place to find me is here on YouTube, youtube.com/Chris Pulver, and a verified Twitter account at Chris Pulver. I'll post the Discord channel here in just a moment. Let's jump into the charts. So pretty wild couple of days. Wednesday, Thursday, pretty much was, head fake on Wednesday, reality and neutralized on Thursday, and here we are just sitting right back where we started. So in a way, it would have been nice to just kind of delete the last 2 days of trading as far as direction because there wasn't any. But as far as short-term opportunities, there was plenty of volatility, and here we are today, second day of Jackson Hole. Jerome Powell is due to speak at 10 o'clock or 10:05 a.m. Eastern Time, and we'll see how that shakes out today. So I'm looking at a couple of positions. I'm going to look at a 436 put. See if we can get something to the downside, hit that strike. So I'm going to get this issued for, let me make sure I'm sharing my screen here. Yep. So I got the chart up here. I'm going to go into a 436 put. I think that's a pretty big contract on the day. So it's slightly out of the money. And that's going to cost me 25th expiration, 436 put. Right now, that 436 put is around 60 cents. And it's trading at a 23 delta, so we're at 439. That'd be a $3 move. Let me just calculate. So if I have a $3 move times a 23 delta, 69 cents. So that's doubling my position if it gets hit. We're trading at 439. Powell's going to speak. I could go to the upside around 442 as well. Let me take a look at that. The 442 call in real-time levels. So 442 trading around. Okay. So 442 and then some, each are around a 25 delta. All right, 442. So I'm going to look at a 442 call and a 436 put and see if either one of those levels get filled today. It is early, but I'm trying to set them out so they're a little bit inexpensive to trade. I think we just have higher premiums this morning. Usually going 2-3 strikes out of the money is not that expensive. But 436 should be the calling card for today. We're at 439 and change. All right, I'll hold off right now. We still have about 25-30 minutes before we'll start to see some headlines from Powell, check some real-time news, and I will say good morning to everybody as well. So anything else here? Let's check the futures dashboard. Market gapped a little bit higher this morning. Futures up, S&P futures up, NASDAQ futures up, just fighting back a little bit. Like I said, pretty wild couple of days. Currency strength chart overnight, things are pretty quiet. We'll see if there's an expansion through the U.S. session. If this starts to break open at all, any currency pair that emerges to the upside or downside, let's see if we can exploit some strength and weakness. So there's either going to be some good fireworks today, or we're going to see, after 2 wild days, we might see a lot of noise. But let's find out. Okay, so I'm going to look at a 436 put. 436 put. Right now that is for 59 cents, 58 cents. 57 cents debit, 56 cents debit. Just going to chase it a little bit. 57. All right, see if I can get filled for 57.
Order filled.
All right. And then a 442 is 57. 58. All right, I'm going to hold off on the call side for right now. All right, so let me get a trade going really quickly. I've got the screen share up. Just let me get this sent out to my Delta Trader group. Delta Trader 8/25 expiration. $4.36 long put for 55 cents debit. Going for an out of the money long put with a 20 to 25 delta. The credit, if SPY hits 436, should be around $1.20 to $1.30. Okay, so let's have a look at everything. I posted this in the Discord group, which I will share that right now. Log into YouTube and get this up here and say hi to everybody. Sorry, I'm just getting all my browsers organized. Here's Discord. Free group chat. Create an invite, copy, and we're live. Dive in here. Okay. There's the Discord group if you'd like to join. Usual suspects this morning. Jan, good morning. Chris, good morning. FK, Ranjit, Linda, David, Catherine, Marty, Daniel, what's happening? Steve, what's happening? Denise, good morning. Okay. Nice to see everybody. So analysis-wise on the SPY, we're heading into the final week of trading next week. So we have August 28th through the 31st, Monday through Thursday. We had a lot of volatility this week, which was kind of surprised prior to Jackson Hole. Yesterday was just a reset with day one. I didn't really see any major headlines out of Jackson Hole, but my thoughts on the SPY is this. If we are inside this yellow box, it's either going to be range trading, but the tendency is going to be if we stay below this trend line, I'm not drawing that very well. If we stay below this trend line here, if price is below this trend line, then there is a correctional bias going to the downside. Okay. Right now, I'm favoring. I mean, as day two Jackson Hole, if Powell says something the market doesn't like, maybe this is another down day. I could also see after a wild day up and a wild day down that today is a nothing day, and then we come into trading next week. And again, I don't have a crystal ball, right? So I think it's pretty simple to say this. If we're in the yellow box and we're not above this trend line, the bias is still in a corrective phase. So could I see the SPY come into 430 and 420? Yes. Those are bigger Fibonacci levels. 420 is the big balance at 50% from the run up this year. So we had this huge run up. If we fall back to 420, that's a 50% correction. Could that happen? Absolutely. Is that going to put us into a bear market? No, that's going to be correction. Okay. So as long as we're on the left-hand side of this trend line, I think it's still in a correction. We're looking for down pushes and everything gets faded. So if we have a rally up, we fade that. Rally up, we get faded to the downside. And I'm looking for, 430. I'm liking long at 430. I'm loving long at 420. All right. And if we have those opportunities, if we get a chance to buy at 430, I'm looking to retest the high. 420, looking to retest the high. I'll be actively looking for bottoming formations. And from there, looking at some risk-on rallies, look to see how the dollar is going to behave. That's one thing we talked about a lot this week in the trading rooms. Is our dollar index, how it's playing out, right? I mean, the dollar index did make a nice daily climb to the upside with a risk-off day. And my DXY, this goes back months of analysis. I thought that the DXY was going to be capable of hitting 105 to 106. That seems to be the case. Okay. John, I said, what's up, dude? How are you? You're awfully bossy this morning. So DXY, I'm looking for 105 to 106, and we have a break to the upside. Okay. So risk off trading on the dollar index or dollar strength, I would expect the stock market to continue to correct a little bit. Couple trades we're looking at TLT this week. It jumped off the lows. We were trading like 93.04. Now it's up to 95 and change. TLT right here. We're at 94.73 from lows at 92.50. Dollar index. I still think this 105, 106 area looks pretty good for a correction. I think this is where some solid resistance holds, and then we'll see if there's a risk on rally into, maybe mid to late September, Q4 into Q1. If there's going to be a window for bullishness, that window for bullishness is probably best in the in like the March to May area of next year. I think the stock market could stay relatively resilient, even if we have corrections coming in right now. We could stay pretty resilient. We're just looking to find levels we're interested in buying. It might be this simple too. We pull back into a 200 exponential moving average, right around this breakout point. Find this 200 EMA, and then we see a rally coming from there. It keeps the uptrend intact, right? I mean, this was a lot of chop where we're above and below. Then we had that big breakout above 420. If we're using just really simple price action, we could just pull back, find our support, and then we rally up. Whether that breaks the high, exceeds the high, goes after all-time highs, that'd be great. But if we could find a directional move from like 420 or 430 all the way back to 460, that makes our trading a lot easier. And in the interim, if we're going to have a correction, right? If we're going to have a correction and more downside, maybe we have another, we're 439, maybe we have another $10 to maybe even $19 to the downside. But the downside is probably going to come a little bit choppier and more difficult than the upside. So if we have a rally, I think it's going to be easier to be long, position out accordingly. Probably I might look at for my Delta Trader equities on demand traders. We might be looking at 5-day, 10-day, even 20-day expirations on some of our trades, and be willing to pay a little bit more for some of the call options, but just look to stay long and see if we can take in some of these gaps. Okay. All right. So that's my thoughts. SPY here, Qs, same thing. Here's the trend line. So this one got a little bit more exciting. We had almost an 11-day sell-off, or $11 sell-off yesterday on the QQQ from top to bottom. That's a big move. So I think on this trade, it's in the same kind of situation. If we're still in yellow, if we're still in the yellow box, the bias is slightly to the downside. If we get a clean break above these highs again, then risk on resumes. That might not seem like a lot, but let's check those highs. So if I had a run from there to the highs, that's still a $15 area on the Qs. And if we come back and retest, all-time highs in the Qs, and we're talking about, 409. So we break above 373, we've got a pretty clean runway towards 405. That's again, we have $15 to $30 of upside on the Qs before I really think we run out of steam, and then, maybe a bit more of a reality sets in. How long does it take? I don't know. But if the market's excited for a Q4, Q1, that's the runway before the Fed really starts to take over with maybe cutting rates and disrupting the market. 2024 is an election year, but that's not really going to get too choppy if things aren't looking like they're, there's not an outlier or anomaly. It's just going to be, a two-party vote and whatever it looks like. I don't know. I honestly have paid very little attention to politics at this point, and I'm trying to trade. Okay. Russian ruble. What do you want to know on the ruble? Do you even trade the ruble? I've had the ruble delisted from my broker. I mean, I don't know when, but what are you doing with it? Can you even trade it with a Forex broker? I don't know. I would stay out of it. It's probably not even available for a U.S. trader. And honestly, a lot of the exotic pairs, I mean, you talk about like the Turkish lira, the Russian ruble, the South African rand, all these are broken. I mean, the Turkish lira has been just ridiculous. Once we had our flash crash move for about 80,000 pips, this thing has been on a rip for 167,000 pips to the upside as Turkey inflation just gets worse and worse and worse. All right, dollar index. Let's go oil, gold, silver. Let me switch this back to the SPY really quickly, and then switch over to this chart for oil. Oil, gold, silver. Oil, I like oil off the 200 EMA at 78, and then another strong level at 75. We were talking about it the last couple of weeks, looking for some support. If you're long oil, I like it. Targeting that yearly pivot at 90 to 95. You could look at some confirmation. You could dollar cost average in. We've been long on USO for a little bit. We had some really nice credit spreads at 67 by 66 and 66 by 65, and US oil is trading in the 70s. So those have played out pretty well for us for profit. Trading at 72, 5 or 6 strikes above our levels, and all these are nicely profitable, which is always a good thing. Gold and silver. Gold below the 200 EMA, back to 200 EMA. We gotta watch the dollar, right? We gotta watch the dollar for gold. If the dollar's going to get stronger, then gold is probably coming back down to 1833, right into this little pocket area. I do like long gold in here, and I really like it down here at 1700 or 1676. But gold could also be in a large range. Same thing with the dollar. We could see the dollar in a range. We could see gold in a range. Gold could come back in. This is the midpoint. We can come back to lows. That's why, like I said, I really like the lows around 1675. Silver's been holding up a little bit better. We talked about this a lot in the trading rooms. Upwise, I mean, the bull channel is still intact. I'd like to see silver hold, hold channel support around 22 and see if we can get back to 29 or 30 bucks. Bitcoin, we're right below the 200 EMA on the daily time frame. This is either a bear flag with more pressure to the downside towards 20K, or like I told traders this week, if Bitcoin crosses back above the 200 and starts to eat back into 27.5 or 28,000, this could be a dip, and we could have a rally back up towards 31, 32. The big breakout to the upside for the bulls has to be above 32,000. I wouldn't get excited at all on Bitcoin unless we break above 32. Even a run back in here, maybe we start that. But we could just, be, I don't know, kind of range bound. It looks, I don't know, this recent fall when SpaceX and Tesla were selling some holdings, that did some structural damage. I feel like the pressure remains to the downside. If we have risk off trading, Bitcoin's probably going to fall. Okay, but if the dollar gets weaker, we have risk appetite, we break back above the 200, then maybe we push back to 31, 32. We break above 32. This is why I'm holding Bitcoin. 32, but I think the next run is 100K. If we have another big bull market, a 2.5 to 3x return is possible, but obviously that's speculation, yeah? All right, currency pair wise, we've had some positions. We took some, let me check my flex stock here. I posted this in my Telegram channel as well for flex right in here, some new trades this week. We have a swing trade on the pound Aussie and pound New Zealand. We have a stacked order, so we're looking to stack some highs on the pound Swiss. We have a stop sell on the Swiss yen, euro yen, and pound yen. I'm actually in the works of working out some type of, I don't know if it's going to be an official course offering, but I'd be curious if I don't officially launch it through market traders, if anyone that's watching this channel, anyone that's following out there would be interested in joining, a live session or a couple of live sessions, a series of sessions or something. I think we have such good setups that I'm willing to kind of block off. There's, roughly 10 currency pairs that I'm really watching, how to position for them, how to dollar cost average in, how to manage your trades and drawdowns. And then once we have confirmation, how to add to those winners and turn these into, big profits. I mean, I'm taking an account around $50,000 that I'd like to say I can comfortably make, $20,000, $25,000 on that account, and not using a big drawdown. I mean, I've essentially managing single-digit drawdowns to produce double-digit gains, and it just, I don't know. I mean, I think that position-wise and technicals make a lot of sense, and I'm willing to wait. I'm willing to be patient, but the environment we have right now is positive carry, positive swap. All these things are good. So it's a pretty conducive environment for the trade style that I'm looking at, and I just have to be patient on some of these to play out. But I think once we put in some tops and bottoms, they're going to be pretty strong. So we do have some exposure here. New Zealand dollar, Aussie New Zealand. We'll keep an eye on those, and then those new trades for this week. Let me scope out and see how the robots did. Can someone make money on Forex without? Yeah, I mean, my biggest jump in Forex was I had $2,500 went to 10 grand, deposited more money, started to see that the process was coming together. From 10 grand to 20 grand was essentially just continue to trade, added some deposits. 20 grand, I had a little drawdown. I went from like 20 back to 16, and then 16 back to 20, kind of treaded water for a little bit, and then 20 turned into 100 in about a year and a half. So that's been like my biggest jump as far as my account size. And once I was over 100 grand, it's been about preservation, it's been about consistency, it's been about process. And so for me, my 100 grand is, can I make 15 to 20 grand a year on that? And can I compound that? So I have an account that I compound, I have an account that I just, have a nice little, uh, profits for the year, and I just give myself a little bonus. So, but yeah, I mean, I don't think you can take a $10,000 or $20,000 account and expect to make a living off of that, but I think you can grow it, But I think the idea is you have to build trust in your process. You got to show you can make pips and profits consistently, and don't quit your day job. Keep trading, keep working, keep depositing money, keep investing in yourself. But I think once anyone has assets of six figures plus, then it becomes a little bit more serious as far as you're making a little bit of a bonus wage with it. And then if you're trading, I mean, for me, if I'm trading, a half a million to a million in assets, I can make a pretty good living trading. But if I'm trading, 10 grand, 20 grand, I'm not making a living with that money. I'm basically trading with that as aggressive risk capital. But I've got, salary and compensation to fall back on. So, you know, if anyone's looking to live off of a smaller account, no, I think that's unrealistic. But, that's the part of getting there in the next 3 to 5 years. Build an account, invest, get the assets larger, and then it's just a percentage and numbers game. Okay. All right. So those are some new trades. Let's take a look here. Got a few more minutes. Powell should be coming into the podium maybe in 10, 15 minutes. We'll see how it stacks up and plays for the day. Let me take a quick peek at the 442, 443. If the market jumps on Powell today, it could be a whipsaw type day. We're opening up here at 439. We've got upside targets around 443. I think 436 is my stronger level, so I'm going to stick with that right now. Yeah, I'm gonna slightly favor the downside. I'd like to see, I mean, if we can get a drop, highs around 439. If we could drop to 435 or lower, that would be pretty nice. Let me see what I've got here. So 60 cents. Could I get $1.80 out of that? If we go down to 435 or 434, that'd be a $4 to $5 move on the day. Let's see. So 60, we'll go 436. I'll move stop losses. I'll set it to like 210 on the day. All right, so we'll see how it plays out. You think the market will sell off like it did on this day of last year? Like this day, are you talking like August 25th of 2022? Or are you talking day 2 of Jackson Hole? I mean, I don't know. I don't think anybody can ever tell you with conviction and certainty like this is what the market's going to do. I don't know. I mean, look, I'm just trying to keep it simple. If this stays in the yellow zone and stays below this trend line, I'm bearish on the SPY. I think that we're in a corrective phase. I think that coming out of August, I mean, this market got ahead of itself right here. We hit that 30%. I was like, man, if this market doesn't care, we might hit this level. But after yesterday's reset, I think it's going to be tough sledding for the bulls at this point. The bulls have to break this level. right? The bulls are going to have to regain 445, and then I'm way more bullish to the upside. But until then, this is, every rally we've seen, rally, fade, rally, fade, rally, fade, right? Rally, fade. We're still in a correction. And this could extend, if we connect the lows, we could extend a little bit more to that downside. That stretches us into that 430 to 420 zone. Way more interest in looking for bottoms in here off those bigger fib numbers. Okay. And obviously, if we come down to 430 or 420, I'm not waiting for the bulls at 445. I will be looking for active bullish patterns and V bottoms to emerge somewhere in here. Okay. So I think as long as we're in the yellow zone or below this trend line, I think it's a corrective phase right now. And this correction is still against the bigger swing from our low in March all the way up to the high in July with that post FOMC high. So we pulled back 23%. A lot of times we close below the 23%. We're able to get to that 38%. And that's kind of my big spot for a correction right in here. If we go a little bit deeper, that's just this 420. And that's the breakout point where we had this kind of rising wedge look, and then the market busted through it. So I could see us coming back to 430, 420. Like I said, bear corrections in there, and then bulls possibly waking up. And I'd say the bulls could be, you know, ready to sniff out highs again. And that would be directionally a great way to trade. If we can get a run of, $20, $30 with a single direction, that makes trading a lot easier. And the same thing is true now. It's like we probably have $8 to, maybe even $20 more downside, but how it gets there in a corrective phase is sometimes very challenging. We can have like the market gap lower, spend the entire day rallying, and then gap lower, spend the entire day rallying, right? Or the market rallies and then it's tough. Like corrections are corrections. So I'm not actively short necessarily, but I'm just, cautiously watching to see that if the correction plays out, I'm going to try to make some money to the downside, lower my cost basis, improve my positioning, and then trying to get a better rip on the upside. That'll be better to trade it, in my opinion. Okay. Currency wise, anything you'd like to take a look at? We spent a lot of time in Flex this week. We added some extra trades. The big pairs I'm talking about as far as the bigger moves, I mean, I'm looking at a pretty big basket trade on the Japanese yen later this year, whether it's late in the year or whether it's, just like literally November, December, January, like it was last year, in the Swiss yen. The Swiss pairs. So Swiss pairs and yen pairs basket wise, I'm looking for some pretty substantial moves. I think the dollar is also the one that we need to pay attention to. I think the dollar is going to offer some good basket trading as well. So, I mean, if we're just talking Japanese yen basket, Swiss basket, dollar basket, that's almost 20 currency pairs. I mean, you have a couple of overlaps, but it's essentially like 18 to 21 currency pairs, and I'm really, really close to getting some exposure on each one of them. Now, as far as opportunity goes, I like the Swiss technically over all of them. The Japanese yen is going to have to prove some confirmation, but I think once we do, there can be some monster moves. I put together, it was like 13 currency pairs and about 13 to 14,000 pips with one entry. So I don't just do one entries. I mean, I build positions, and usually I build like 3 to 5 entries. And if I really like a trade, then I'm adding probably 10, 15, 20 entries. So, I mean, 13,000 pips with single entries, we're probably talking upwards of 50,000 pips to 100,000 pips when some of my targets get hit, as far as me adding to positions and adding it all up. So I do have big plans for the Forex market. I'm, waiting patiently. Traders in my flex room know that. But we haven't even begun to see the confirmations that we want, and we haven't even begun to add to our positions either. So when it all starts to take place, and I think outlook-wise, maybe the next 6 months, I'd like to be optimistic that we can have some good things happening then. So that's what I'll be watching. All right. So a lot of the directions are about the same. Keep an eye on things. Powell's going to take the microphone here in a little bit. Let's see here. Sentiment came in softer than expected. Powell should be taking the micro. Look, I mean, he's going to say the exact same stuff, right? So 10 a.m. U of M sentiment indicator was a little bit softer. And whatever Powell says today, I don't think he's going to say something the market's going to really like to hear. That doesn't necessarily mean it's bullish or bearish. I mean, it could be a noisy day, right? We've seen FOMC be very noisy at times, and could be that type of day today. So if we have direction today, great. We maybe take out the lows, push a little bit lower. The highs around 439, and we could push down to 436 or 435. get a $3 to $4 move on the day. If we extend back past that, that's even better. The ATR right now is around 454. So it doesn't mean we have to go that far, but we had a stretch, $5 and change, $6, $7, $8 and change. Yesterday was a pretty wild day. So things could tighten up a little bit. We could have a bit of a breather with Powell, but we'll see. I've got the 436, and that's the price that I'm watching. And to the upside, 443 is possible, but I've got bigger strike levels and gamma levels and contract sizes. Liquidity pockets are lower at 436 and 435. So that's what I'm going to be basically trading for directionally today. Okay. All right. It's just after 10 o'clock. Any final questions? Any final questions? Otherwise, again, you're all welcome to join the Discord channel. I'll keep you posted on the bigger picture stuff. I talked about it with market traders yesterday. Their thoughts are, well, this might just be more of a prediction, not really a course. It's like, I don't care what they want to. I mean, if they want to say it's prediction, fine. But I'm essentially saying, look, here's how I'm going to position my entire account based on 13,000 pips I'm pretty confident with, and adding to positions, essentially trying to make 50% of my account or more. So I think it's something that traders would possibly be interested in, because it's not something we have to sit and monitor all the time. It's like, I'm going to scale into levels that I like. I'm going to set my trades up ahead of time, put expirations out months in advance, and then monitor my levels. And so we kind of set it all up ahead of time. We plan our trade and do our thing. Okay. All right. Getting a rip to the downside. We're at 438. Gap fill, maybe 436. Let's see what happens. I'm looking for some comments here. Anything? Bullish fundamentals limit downside for oil prices. Sentiment report, 69.5, which is under forecast. Market's spiking all over the place right now. I'm not sure if Powell's taking the stage. I don't know. The market's just doing its thing. So, not going to chase, but we'll see what happens. Okay, all right. I'll jump into EOD, and I will see you in class. Okay, all right. Thanks for being here, everybody, and see you soon. Thanks, bye.